Hello there guys and welcome to The Break. My name is Patricia Bright. We are over here giving you the tools and resources to learn, grow, navigate life like a boss and make money moves in the process. I hope you are doing well. So today we are getting into it and I'm going to talk about how to invest in property like a pro. Yep, I thought I would talk about it based on my experience. Pro category here. No, not really. I have invested in a couple of properties. I've enjoyed the process and I feel like there's a lot that I wanted to bring to the table. And I know that a lot of you guys have asked about this. There are many who are like, how do I get a house? How do I become an investor? How do I invest in property? I'm not into GameStop, I'm not into Bitcoin, but I know that I want a house. And I know in reality, there's something about houses and homes and investing in houses that just feels so tangible. You can touch it, you can feel it, and it can at least keep you warm at night if you need it to. Now, in reality, property has been used as a way of investing for many years. Let's be real, a house in the 80s cost nothing like what it costs today. You have heard about the aunties, the uncles, the grandparents who bought their house for like 2 shillings and a cow. And now we have to break an arm and a leg and have £1 million in the bank to get on the property ladder. So personally, I've gone down the route of property investing and I've put over £1 million down on homes and assets. And from that £1 million that I put down, I make about 66,000 to maybe 70,000 a year as a passive income source. And I receive about 6,000 on a monthly basis, which is about a 6% return on my investment, which is much better than having that money just sitting in the bank, not doing anything at all. So today I'm going to get into investing in property for beginners. So before I get into this, I want to clarify 2 things. I am not a financial advisor, okay? This is financial edutainment, but 2, I do have experience. Now, I will tell you now that property is not a get-rich-quick scheme. There is a lot of scamminess going around, like, property deals and all this kind of stuff. Don't let anybody tell you to cash out them some money to get on the property ladder. Let's not do that today, not in 2021. I'm sure this is pretty obvious, but the first thing you want to consider when you are starting to invest in property is to have your finances in check. That means having a budget and having a deposit or money to put into a property. When it comes to the budget, it's knowing what kind of property you can actually afford and how much you want to commit to maybe doing up that property or investing in that property, because the cost around getting a property do actually add up. And you need more than just a deposit. You need some extras for anything else that's going to happen on the side. And if you're going down the mortgage route and you want to find a decent lender, you're going to need a healthy deposit to make sure that you get the best offers on the table. I know that we are all currently living through a time where the interest rates are so low and so good, and if you can secure a great deal today for like 5 or 6 years, amazing. But that is going to be impacted by your loan to value. So again, the larger deposit that you're able to put down, the better offers of mortgages you will receive, thus a lower interest rate, so things will be cheaper overall. So you've got the money, you've got the deposit, you want to search for the property. And I know lots of people think that there's some secret world of secret properties, but there really isn't. Now, there's a few ways that you can make sure you can get the right property for the right offer, but what you really want to do is do the research. And that means 1, canvassing. There are people who actually literally leaflet areas, write a personalized note to people and say, I'd love to buy your house and here's an offer that I have for you. People do that if they're looking for a certain property deal. And of course, you can check out the Zooplas, the Rightmoves, the Zillows of this world to find properties that are on sale. But what you want to do is make sure that you're getting a property for a reasonable price. So what you want to look at is previous home sales on that road or in that area, as well as do your research on where the market may or may not be going. What I also look at is what's the rental yield in that area. If there are properties already rented, what are they renting for? Then you can do the actual maths, okay? If I spend $1 million on a property on a road where the houses are 500,000 in an area where the average rental is 3K or 2K, I know that that's not going to be worth it because the maths doesn't add up. So once you are able to make sure you got the finances, you know what kind of property you want, you need to do those numbers to look at if it is worth your time and worth your investment. Particularly if you're getting a mortgage and a loan, if you want to look at those repayments, you need to make sure that the rental income is significantly above the amount that you're going to be paying back to the mortgage lender, and an extra buffer to secure you. So with a lovely, sexy spreadsheet, you're going to want to have a look at the average cost of rents in the area. You're going to want to compare your square footage to other properties in the area. You're going to want to, of course, look at what your mortgage repayments are going to be if you're going down the route of a mortgage, and then making sure that the rental you're able to get in is able to cover that mortgage cost and then some, because you always need to have a buffer or money for eventualities as well. You also want to know if there's good schools, great transport links, and you really want to be realistic about the kind of person who may be living in that property, and so that you do it up to a standard that works for their needs. What you don't want to do is invest intensely in a property that's then going to need to be redone every single year or every time that tenant leaves the property. No sorry. You've done the maths, you've done the research, you've got your money together, you want to have your strategy. You want to go ahead and make your purchase, but before you make your purchase, let's be real, be sure you know what route you're going down. If you're going down the buy-to-let route, please do factor in wear and tear. Boilers break down. People need help. If you don't want to service people, I don't think it's a good idea to become a landlord, because they can call you in the middle of the night if the electricity goes out, depending on the contract that they have. And when you go down the route of buy-to-let, you really want to make sure that you have your contracts and paperwork in place. And you also have to understand legislation around being a landlord. If you've got crazy tenants, you can't just kick them out. There is a huge process around this. You could have crazy tenants in a property for like a year and a half, and they may never pay rent, and you've got to pay that. So there are things that you want to consider in that space as well. You may choose to go down the property development route. So when you are thinking about property development, again, it's all about doing the maths and ensuring that you can reach the ceiling price in that area. Do not overspend when it comes to doing up a property, particularly if your price is going to be the highest price that road has ever seen before. It may not be worth it, and you may not be able to receive a sale. Just because you spent loads of money in it doesn't mean that it's worth it to buyers. Now, for those of you who don't actually have a lot of capital and kind of want to invest in property but don't really know how, there are actually other options other than like literally buying a big, clunky, heavy house. If you don't know, property is very illiquid. You can't just press a button and the house turns into cash. It doesn't work like that. Let me be real with you. It could take years, months to even be able to sell a property, and it's a huge process. But there are other options. There are options such as crowdfunding when it comes to property investments. I've seen a number of different websites and platforms that allow you to invest in property deals, and I don't want to recommend any specifically because I have no affiliateship with them, but I have seen Brick app, which allows you to invest in properties, as well as Property Partners. They're also traded on the stock exchange as well, which is pretty good. But there are, again, crowdfunding platforms that allow you to invest in properties. You may put in 500, 5,000 or whatever, and then that goes into different properties, and so you have part of that investment, and they can also receive part of the reward. And then you can invest in things such as REITs. If you don't want to own the property, but you want to own and be part of people who invest in properties, this is a type of investment product. And actually these companies, they invest in properties and you've invested in them. So you basically own part of the properties that they own, but with less of the risk. Although anytime you invest, there is a risk of you losing your money, be that property or stocks and shares or REITs. It's fine. You are at risk. Okay, so let us talk about risk, because I think that when it comes to any form of investing, you have to think about these risks. Because yes, property prices do go up and down. If you buy a property in the peak of the market and then they fall, your heart's gonna be probably falling down to the ground with it as well. And if you have got a mortgage and interest rates go up, it can be a very peculiar situation, and it isn't great if you don't have a lot of free cash flow. Assuming that the prices of properties will all go up forever and ever and ever is incorrect. history has shown that prices have gone up and down and up and down and up and down, but usually it goes up and down in an upward trajectory. But you need to be confident that you're able to wait out the lows, and if you can't, don't do it. Another risk is also that rents are not guaranteed. I've been very lucky that I have amazing tenants. I've got tenants who've been in my property for literally 4 years now, and they've just never missed a payment. Though they are moving, so we can go to that property. Hit the like button if you want to visit that property. We'll do that. They're leaving in March, I believe. Sorry, that's me just talking about my lovely tenants. But not all tenants are that lovely, and it's not even some of their fault. Some people lose their jobs. Some people just can't pay their rent. Some people don't want to pay their rent. What are you gonna do? You're liable. You still have to pay the bank. You still have to deal with these tenants, and it can be a lengthy and expensive process to actually get the tenant out of your property. And will you be able to afford that? And then let's get into repairs and damage. These are things that can actually eat into your profit margins. And if your profit margins are really low, so basically you're only making £200 if you take out your rent versus your income, and then you get a boiler breakdown, that's your profit wiped. That's your profit completely and utterly wiped for a season. So you really do need to think about the costs and factor these in. Do not spend the money like, oh my God, I got some passive rental income. You spend it all and then something happens and you can't deal with it. So the same way you will budget for your own personal expenses, you probably need to budget for your property expenses as well. Okay guys, that is it. That is me giving you a bit of insight when it comes to property investing for beginners. Now, if you want more info and more details, we can talk about it. We can be up on Instagram and have these conversations, or I can do more videos if you want. Just let me know in the comments and leave a like if you like videos like this. Okay guys, thank you so much for watching, and in the meantime, I'll catch you all later. Bye.